Thank you for joining us today as we launch the Local Assistance and Tribal Consistency Fund for eligible revenue sharing counties. Today, we will cover eligible uses of the funds, key eligibility criteria for eligible revenue sharing counties, and key dates and next steps for those counties that elect to join the program. Before I turn over to our next speaker, I would like to share a bit about this presentation with you. As a reminder, the U.S. Department of the Treasury is providing this presentation for informational purposes. The descriptions provided in this document are non-exhaustive, do not describe all terms and conditions associated with the use of the Local Assistance and Tribal Consistency Fund, and do not describe all requirements that apply to this funding. Any award from the Local Assistance and Tribal Consistency Fund will be subject to the terms and conditions of the agreement entered into by Treasury and the respective government, which incorporate the provisions of the program that implements this program. Now I will turn over to my colleague, Jennifer North, Policy Lead in the Office of Recovery Programs, to tell you more about the eligible uses and which counties are eligible to apply for funds.
For eligible revenue sharing counties, the LATCF provides $750 million for fiscal years 2022 and 2023, totaling $1.5 billion. Recipients have broad discretion in using LATCF funds, which we'll discuss in more detail. Specifically, the statute permits recipients to use funds for any governmental purpose other than a lobbying activity. As you have questions throughout the presentation, please place them in the chat box and we will answer as best we can during the Q&A. And as we've previously noted, a copy of these slides and a recording of this presentation will be available on our website. Let's begin by looking at eligible uses of funds. As noted, the statute says that recipients may use funds for any governmental purpose other than a lobbying activity. Recipients may treat these funds similarly to how they treat their general revenue funds. And when considering the provision to fulfill a governmental purpose, programs, services, and capital expenditures that are traditionally undertaken by a government are considered to meet that requirement. For example, recipients could use funds for long-term economic development activities, including affordable housing development, workforce development, or other programs to strengthen local communities undergoing economic transitions. Please note that LATCF funds may not be used for lobbying activities, as further described in the LATCF guidance. Finally, LATCF funds are available to recipients until they are expended or returned to Treasury. The LATCF guidance is available on Treasury's website, and we will now drop a link in the chat to that guidance. This guidance provides further details about how recipients may use LATCF funds. And I will now review three parts of that guidance. The first is the applicability of the Federal Davis-Bacon Act and the National Environmental Policy Act, or NEPA. The Federal Davis-Bacon Act prevailing wage rate requirements do not apply to projects funded solely by the LATCF, except for LATCF-funded construction projects undertaken by the District of Columbia. Further, generally, receipt of LATCF funding does not trigger the National Environmental Policy Act, although recipients must ensure compliance with all applicable federal environmental laws. The second part I'd like to speak to is transfer of funds. Recipients may transfer to and pool LATCF funds with other entities for projects that they want to undertake, provided that recipients are able to track the use of funds in line with the reporting and compliance requirements of the LATCF program. And we will discuss those requirements momentarily. As an example, recipients could pool funds as neighboring counties in order to invest in a regional infrastructure project. Third, on using funds for non-federal matching requirements, Treasury has determined that funds available under the LATCF program constitute revenue sharing, and therefore funds under the LATCF program may be used to meet the non-federal cost share or matching requirements of other federal programs, provided that the costs are eligible costs under the other federal program and are compliant with the statutory, regulatory, and program requirements of the LATCF program and the other federal program. Now I will speak to the Build America, Buy America Act applicability. The Build America, Buy America Act, or also known as BABA, established domestic content procurement preference requirements for federal financial assistance programs for infrastructure. As it pertains to the LATCF, as a general matter, the domestic content procurement preference requirements in the Build America, Buy America Act apply to infrastructure projects under the LATCF. These requirements do not apply to non-infrastructure projects or to infrastructure projects undertaken in response to the COVID-19 public health emergency. However, and notably, for eligible revenue sharing counties, Treasury has received approval of a 6-month waiver from the Build America, Buy America Act requirements for awards made under the LATCF program within the waiver period. What this means is that eligible revenue sharing county recipients who sign their award agreements within the waiver period will not be subject to the Build America, Buy America Act requirements. You can read the BABA waiver on Treasury's website if you have more questions about this. Now I will discuss the eligibility criteria for the LATCF program. So Congress defined in the statute that eligible revenue sharing counties include any county, parish, or borough that is independent of any other unit of local government, and that, as determined by the Secretary, is the principal provider of government services for the area within its jurisdiction, and for which, as determined by the Secretary, there is a negative revenue impact due to the implementation of a federal program or changes to such program. The statute also specifically includes the District of Columbia, the Commonwealth of Puerto Rico, Guam, and the United States Virgin Islands as eligible revenue sharing counties. On the next slide, we will further discuss the eligibility criteria for this program. For eligible units of government that are a county, parish, or borough that is independent of any other unit of local government and serves as the principal provider of government services, Treasury referred to the Census Bureau's Census of Governments and its classification of the functional status of counties and equivalents. To determine the counties that had a negative revenue impact due to the implementation of a federal program or changes to such program, Treasury referred to the counties that participate in the Payments in Lieu of Taxes, or PILT program administered by the Department of the Interior, and the Refuge Revenue Sharing Program administered by the Fish and Wildlife Service. Applying these criteria, there are 2,086 governments eligible for LATCF as eligible revenue sharing counties. And this figure includes the District of Columbia, the Commonwealth of Puerto Rico, Guam, and the US Virgin Islands. Now I will speak to the allocations methodology that Treasury employed when developing the allocation formula. The statute requires Treasury to develop an allocation formula taking into account the economic conditions of each eligible revenue sharing county using measurements of poverty rates, household income, land values, and unemployment rates, as well as other economic indicators over the 20-year period ending September 30th, 2021. Treasury accounted for the 4 economic conditions in the statute and also incorporated childhood poverty rates and population as other economic indicators. For each fiscal year, Treasury set a minimum allocation of $50,000, a maximum allocation of $6 million, and a per capita maximum of $300 for each eligible revenue sharing county. Treasury expects that recipients will receive payment in 2 tranches, 1 payment for each of fiscal years 2022 and 2023. Now, I would like to look at the reporting requirements for the LATCF program. Eligible revenue sharing counties are required to submit an annual obligation and expenditure report and comply with certification and compliance guidelines. Each recipient is required to submit its obligation and expenditure report to Treasury by March 31st of each year, beginning in 2023. This report will account for the period covering the preceding calendar year, January 1st to December 31st. Recipients are required to submit reports until the recipient has submitted its final report accounting for expenditure of all LATCF funds received. Generally, the obligation and expenditure report will include reporting on current period obligations, cumulative obligations, current period expenditures, and cumulative expenditures for each governmental purpose reporting category. The obligation and expenditure report will also include a certification with every annual report that no LATCF funds were used for lobbying activities, in addition to completing annual certification and representations in SAM.gov. Recipients may reference the reporting guidance for the LATCF program posted on the LATCF website. Now I will speak about how to accept your LATCF funds. In order to access funds, eligible revenue sharing counties will need to complete a submission in the LATCF application portal and provide the necessary information requested. To reach this screen, you will navigate to the LATCF website. We've included a link in the chat so you can follow along if you wish. You'll then click on the LATCF application portal, the button highlighted in number 2 on the slide, and follow instructions for completion. Please note that the submitter for the state and local fiscal recovery funds submission should log into the portal for ease of accessibility. One item to note is that the eligible revenue sharing counties recipients will already have their submission data preloaded into the system to make the submission process easier. Recipients will be able to edit this submission data until their authorized representative has signed the terms and conditions. Lastly, we will cover important times. On September 29th, Treasury opened the portal for submissions, and payments will go to recipients on a rolling basis. On January 31st, the submission deadline for eligible revenue sharing counties to get their submission for payment in. And then on March 31st, 2023, the first obligation and expenditure report is due. And in 2023, Treasury will begin making second tranche payments. Recipients will receive more information from Treasury once we have additional guidance to share. I will now turn it back to Laura for the question and answer period.
Well, thank you, everyone. And thank you, Jen. Thanks all of you for joining us today for an overview of the Local Assistance and Tribal Consistency Fund. I want to go over briefly before we go to the Q&A on the materials that are linked in the chat. So you'll find links to the program guidance, reporting guidance, allocations methodology, and the LATCF website itself as you search for more information. So now we will turn to the Q&A portion of the presentation.